Imagine turning 500,000 naira into 1.150 million naira in less than 8 months. Sounds like headline, but it actually happened for some Nigerian stocks in 2025. Today, I'll review 3 Nigerian stocks that could make you rich in 2025, and I'll prove it. I'll show you the exact January 2025 prices, the percentage moves, and what a 500,000 naira bet would be worth today. Then I'll break down the fundamentals, the technical setups, and the realistic that must hold for this to keep running. There is no hype, just facts, charts, and clear takeaways. Stay till the end. I'll tell you how to join my free YouTube WhatsApp community if you want to start investing properly in the Nigerian and US stock markets. It's completely free for now only. So if this is your first time on this channel, I'm Jude Anyanwu, you are welcome, and to my returning subscribers, thank you so much and you are highly welcome back. The method I used to prove this is that I used market historicals from January 2025 and August 2025 closing prices. August 8, 2025 precisely. That was when this video was recorded. Then calculated percentage change and the value of a 500,000 naira position bought in January and held through August 2025. I will show you the calculation for each company as well, and the number one stock is MTN Nigeria. MTN Nigeria is the telecom giant, and in 2025 it staged a massive comeback. The January 2025 reference price was 200 naira, being opening of year level used for YTD calculation. For those who are new in the stock market, YTD means year to date, which measures the stock's performance from the start of the year, being January 1st up to the current date. So as at August 8, 2025 price close was 460 naira per share. This means that from January to August percentage gain was roughly plus 130%. This means that if you bought 500,000 naira worth of MTN shares in January 2025 at 200 naira per share, your shares bought will be 500,000 divided by 200 equals 2,500 shares. Since the value was 460 naira per share as at 8th of August 2025, then 2,500 was the number of shares you have. Multiply 2,500 by 460 naira. If you do the maths, your share value of 500,000 naira in January 2025 would be worth 1,150,000 naira on August 8, 2025. That's more than double, a plus 130% return in 7 to 8 months. I have 3 reasons why MTN ran. 3 fundamentals, and the number one is revenue recovery and the first half of the year 2025 swing. MTN reported a strong H1 2025 operating improvement and returned to profit after a difficult 2024 impacted by currency issues. Market reacted to the turnaround. The second fundamental is operational scale and cash flows. Large subscriber base, strong cash generation, recurring revenue, voice plus data plus fintech, and pricing power in Nigeria. And the third one is macro repricing. The market started to reward telecos as FX pressures eased slightly and as investors priced in higher average revenue per user trends. The technical analysis in July to August 2025 includes momentum breakouts. The next is support levels. Prior consolidation area near 200 naira to 250 naira became a long-term support region, giving a strong risk reward for early buyers. And the last one is volume confirmation. Spikes in volume during the July advance signals institutional accumulation. If MTN keeps growing service revenue and sustains profit growth, and Nigeria's FX and macro situation stabilizes, this rally could continue. But the if is real, big currency moves or regulatory shocks can reverse gains fast. The risk/red flags to be conscious about are FX volatility, regulatory risk, licensing/taxes, and the fact that telecoms are capital intensive. Also watch MTN Group headlines. The parent's action can affect local sentiment. How a beginner could have approached it was to buy on pullbacks into 400 naira to 350 naira with stop loss below key supports, and size the position so you don't overexpose to telecom specific risk. And the number 2 stock is Guaranteed Trust Holding Company, also known as GTCO, a bank that was 57 naira at the start of 2025 and crossed triple-digit territory by mid-2025. That's a massive run for shareholders. January 2025 price approximately start of year was 57 naira, while on the 8th of August 2025 price close was 100 naira. That's to say from January to August 2025 percentage gain was plus 75.4%. If you bought 500,000 naira worth of GTCO in January 2025 at 57 naira per share, shares bought would be 500,000 divided by 57, which will give you 8,879.93 shares. The share price as I were recording this video was 100 naira per share. That means 8,771.93 multiplied by 100, which will make the total value of your share to worth 877,193 naira. That's roughly plus 75% in 7 to 8 months. Here are three fundamentals why GTCO ran. The first was strong earnings and market optimism. GTCO posted robust earnings growth and the market priced in better profitability and increased returns as loan performance improved. The second one is strategic initiatives. Moves like capital raises, cost control, digital banking growth, and expansion into other financial services improved investor confidence. And the third one is London/foreign listing and access to capital. Public reports and market commentary in 2025 pointed to GTCO pursuing wider capital access strategy. The London listing talk, which tends to re-rate big bank names. What about technical analysis? Steady uptrend with accelerating leg in June-July. The stock had a multi-month consolidation between 50 naira to 70 naira, and then an acceleration breach through 80 naira to 90 naira on volume. Another one is key moving average confluence. 50-day moving average crossing above longer MA, bullish confirmation. Volume spikes on breakout days also validated the move. If GTCO can sustain loan growth and keep NPLs under control and successfully access offshore capital without demanding equity value, the re-rate can continue. Conversely, any bank sector shock can wipe out gains quickly. For the sake of someone who needs to know what NPLs is, NPLs means non-performing loans. Risks include banking sector sensitivity to interest rates, regulatory recapitalization requirements, and reputation/regulatory compliance concerns. Past AML fines are remembered by markets. Always size positions mindful of bank-specific tail risks. And the number 3 stock is a heavyweight industrial that quietly rose and still pays dividends. It's none other than Dangote Cement. Dangote Cement is not the fastest runner this year, but a concrete pun intended wealth builder for income plus growth. January 2025 price was 478.80 naira per share, which was opening/reference level used. On August 8, 2025 price close was 577 naira per share. Between January to August percentage gain was plus 20.5%. If you bought 500,000 naira worth of Dangote Cement in January 2025 at 478.80 naira, shares bought would be 500,000 divided by 478.80 and it will give you 1,044.28 shares. Value of your shares on August 8 would be 602,549 naira. That's about 20.5% return. Three fundamentals why Dangote Cement moved was 1. Scale and dominant market share. Dangote Cement is the largest cement maker in sub-Saharan Africa. Pricing power and economies of scale matter. 2. Earnings and capex activity. The company continues to expand plants and export activity. Stronger earnings and balance sheet strength support valuation. 2024 to 2025 showed solid cash flows and low leverage metrics versus peers. 3. Dividend appeal and defensive industrial exposure. For investors seeking durable businesses with a mix of dividend plus capital appreciation, Dangote fits the bill. At this point, let's move straight to the technical analysis of Dangote Cement. Consolidation then breakout traded in a broad base in the first half of 2025. Then strength in July to August pushed it higher. The breakout to 528 naira to 577 naira was validated by increased daily volume. If construction demand, domestic plus export, remains resilient and macro inflation stabilizes, then Dangote Cement can surprise to the upside. But cement is cyclical. A large fall in construction demand or commodity stocks could dent margins. Now, what are the risks or red flags? Cyclical demand, commodity and freight costs, and political/regulatory changes that affect large infrastructure projects. From my explanations in this video, you can clearly see for yourself that MTN Nigeria, did plus 130%, GTCO plus 75.4%, and Dangote Cement plus 20.5% between January to August 2025. Now, the aspect of this video I'm about to share with you is more of a bonus tips. It is how to turn these facts into a real investment plan. 1. Decide your objective. If it is growth, do MTN. Growth plus capital appreciation, go for GTCO. While income plus stability, choose Dangote. 2. Position sizing, no more than 5 to 10% of portfolio in one stock. Avoid over leverage. Number 3. Entry tactics. Buy on pullbacks or use dollar cost averaging for less timing risk. Number 4. Risk control. Set stop losses. It could be mental stop losses. And define your sell rules. Target plus trading stops. 5. Keep a news flow watch list. Number 6. Tax and paperwork. Make sure you buy via a regulated broker like Bamboo, Truth, or Stanbic IBTC. etc. and make sure you keep trade records for taxes. Before this video ends, I would like to bring to your notice this risk reminder and reality check. Past performance is not a guarantee of future returns. The market can reverse. These three stocks were strong in January to August 2025, but the continuation depends on earnings, macro, FX, and sentiment. Always manage risk and avoid all-in bets. Do you want help getting started? Join my free YouTube WhatsApp community. The link is pinned on my channel page and on this video description. We share trade ideas, business and investment ideas, mini lessons, and step-by-step help for beginners. It's free for now. Come ask questions and learn how to build a plan. Alright, those are the 3 Nigerian stocks that could make you rich in 2025, but only if with the right combinations of earnings, macro stability, and investor sentiment hold. So we have come to the end of this video, and I say thanks so much for staying till the end. See you in the next one.